Now, the war that started on February 28th, triggering a huge energy crunch. It was high in the minds as G7 finance ministers and central bankers wrapped up 2 days of talks here in the French capital ahead of next month's G7 summit. Yuka is here with us from our business desk, and we're also pleased to welcome, he's Greece's finance minister, but also President of the Eurogroup, representing the countries that share the euro as a common currency, Kyriakos Pierrakakis. Thanks for being with us both. Yuka, again, Iran is, I guess, the one word on everyone's mind.
Yeah, and with a transactional US president, it's not been easy for the G7 nations to speak with one voice on some issues. Host nation France's finance minister acknowledged the discussions were sometimes difficult. For example, while the US this week announced another 30-day extension to a sanctions waiver for Russian oil, the EU said it was not the time to ease pressure on Moscow. One of the things they did agree was the need to get oil and goods flowing through the Strait of Hormuz immediately. Let's take a listen to Roland Lescure.
We call for the reopening of the Strait of Hormuz. We call for a lasting resolution to the conflict. We will closely monitor its impact with international organizations. But I want to be clear. The Strait of Hormuz needs to be open, free of charge. We know that the longer it takes, the tougher it will be for our economy.
Now, Minister Kyriakakis, thank you again. You are the president of the Eurogroup that brings together the 21 members of the single currency Eurozone. The effective closure, as we just heard from the French minister, and tensions around the Gulf are already causing a huge impact on the global economy. High energy prices are now pushing general inflation up. The Eurozone, in the Eurozone, is expected to have reached 3% in April, and that's driven largely by higher energy costs. What are policymakers then going to do about it? And are interest rate hikes next on the agenda?
First of all, let me say I'm delighted to be joining you, and we had a very interesting G7 meeting. The French presidency of the G7 is doing a wonderful job integrating all the core issues, all, I would say, the geopolitical fault lines that we have to discuss and where we need to develop a common vocabulary between us. And needless to say, at the European level, we need to do exactly what your question suggests. We need to deploy a series of policies which are coordinated, orchestrated, and which will work. So to a very large extent, we have been discussing with the IMF. We have seen what worked in 2022 when Russia invaded Ukraine. Some of the policies did work, some didn't. So now we have a toolkit ready. Have we been deploying that toolkit? To a very large extent, yes. The European Commission has defined measures that work as temporary, targeted and tailored. In many countries in the Eurozone, we're exactly implementing those measures. So this is a function of how this whole crisis will play out. I agree with my good friend Roland Lescure. The straits need to open. They shouldn't be a toll road. But the duration of the crisis, the depth of the crisis, and the status of the Strait of Hormuz after it opens, the explicit status that it will define exactly what we will have to deal with. And needless to say, we're closely monitoring the situation, but we know that we need to act in an orchestrated manner every day, and we're on top of things.
Now, concerted efforts are needed. We agree on that. But there are divisions. The U.S. Treasury Secretary, Scott Bessent, has called on the EU to join the America's fight to break up financial networks, helping the Iranian regime, quite critically saying that the U.S. sometimes finds itself alone in this. What do you have to say on this?
First, we're part of the solution, not part of the problem, vis-a-vis the crisis in the Middle East, vis-a-vis the Strait of Hormuz. What you just described is in the context of a broader event which is taking place here in Paris at Bercy, which the French presidency of the G7 initiated, how to stop financing terrorism. So all of us are part of the solution, and we plan to help. But what we do understand, and what we all understand, is that certain issues surpass the capabilities of one country, even the biggest and the strongest country in the world. There are certain issues which require multilateralism. And I'm happy to say that in the context of the meeting, I cannot explicitly mention what was discussed, as you understand. But what I can tell you is that the spirit of the discussions was constructive and positive. There is an understanding that in most of the issues that we're currently trying to tackle, be they the energy crisis that we have in front of us and its geopolitical implications, be they AI and how to govern AI with the recent developments of anthropic mythos, we need more multilateralism at a period, to be frank, where this whole notion is considered to be challenged. So there is an understanding that certain things necessitate further coordination, deeper coordination amongst us.
Multilateralism, that's a key word, because back in 2008, everybody had to sing from the same hymn sheet in the face of the financial crisis there. Times are different in 2026. On Friday, there's going to be a swearing in of a new chairman of the Federal Reserve by Donald Trump himself. Trump, who's bashed the concept of higher interest rates, but inflation is what we have right now. Do you see a decoupling between what the European Central Bank does and what the Fed does going forward?
First of all, because you asked me about interest rates before, for us, interest rates and interest rate policy has to do with the independence of the ECB, which we need to guard and which we need to protect and trust. So
and what if the Fed is no longer independent?
Well, there is specific policy independence on behalf of the Fed as defined by the institutional design of the American federal government. But having said this, what I can tell you is what our policy is. So the transatlantic relationship, which touches upon the issue that you raised, but touches upon many other issues, I mentioned AI, I think is an existential relationship. And it's a relationship that should go well beyond the vocabulary of the here and the now or, the current topic du jour.
But what happens if the interest rates go up in Europe and down in the United States?
Once this happens, or if this happens, we will have further economic discussions. I'm not going to comment on this ex ante. This is something that we will see on the ground. But what I can tell you overall about the relationship, because we just had meetings in the context of the G7 with our counterparts from the US, from Japan, we tend to over-dramatize the present and we tend to underestimate the future, even the near-term future. So there is an understanding, because of the depth of the issues that we're trying to discuss and find solutions to, that we need better coordination amongst us. And I think that this is becoming more vivid the more difficult the issues become, be they critical minerals, be they AI, be they how to tackle the crisis in the Strait of Hormuz. We understand that the implication is global, and thus the necessitated solution is global by itself, by its very nature.
And could the current crisis also have an impact on long-term projects for the European Union and the Eurogroup, such as the banking union, the capital market integration?
Yes, it does, and yes, it should. Because, A, if you look at what the IMF told us at a recent Eurogroup meeting, they made an assessment of what we did since 2022 in Europe. And what they said is the measures that you took since 2022 enabled you to have 12% less of an impact compared to what you would have had you not taken them, i.e. diversify from Russian energy sources, i.e. invest in energy infrastructure. So we need to do more of this at the European level. We need to produce more. For Europe, no production, no power. We need to understand that we need to get our house in order. And getting our house in order has implications for energy policy, more storage, more investment in grids, more innovation, a broader European energy market. That's one package of solutions that we need to certainly explore and deploy. But it's also the Savings and Investment Union, which we have been discussing for years. We discussed it as the Capital Markets Union and the Banking Union, which you suggested. But if you bundle all of those things together, it's effectively what Europe needs to do. We still have a fragmented environment of 27 capital markets to a certain extent. And we're underutilizing this. We are not channeling savings into investments. And this is certainly quite interesting for growth. It's certainly quite interesting for energy too. So we understand this. European leaders understand this. European ministers of finance understand this. I can certainly tell you that. It's all about delivery right now. Everything has been put into strategic documents, be they the Draghi report, the Leto report. We know what we need to do. Now we're in delivery mode.
With inflation rising and the cost of living, people struggling with the rising cost of living, it might be difficult to call on people to invest more. Is this the time? This is the time to invest and not hold your cash in balance.
That's obviously a challenge because we need to have three things in mind at the here and the now. The first element is exactly this. We know as politicians, as policymakers, that we need to support businesses and households because there are people who are affected by this crisis deeply, people who are watching us. Second, at the same time, we need to know that the energy crisis shouldn't metastasize into a fiscal crisis. You saw the bond markets today. What is happening in the bond markets is, to a very large extent, I would say primarily a function of uncertainty, of what we're seeing at the Straits. But we are also cognizant of the fact that you need to respect the markets in your policy making. And third, what you do in the short run affects the implication in the long run. Look at the 70s. Look at the oil crisis of the 70s. What we did in the oil crisis in the 70s was sticky. nuclear capacity building, specifically in France, where we're at, to a very large extent happened because of the oil crisis of the 1970s, more North Sea oil explorations, the creation of the International Energy Agency, and in the 70s, we discovered a love for Soviet energy sources, then afterwards Russian energy sources. Some of the things that happened as a consequence of the then energy crisis were positive, some of them were negative. So what should we be cognizant of? What you do now, in the short run, should fit your long-run aspirations. And for Europe, the question is, can we capacity build our sovereignty? Not necessarily our autonomy, because autonomy is not exactly a synonym of sovereignty. But we should understand how to become more sovereign, be that in our technology, be that in our overall power projection. As I said before, no production, no power. We need to capacity build, and we need to deliver this fast.
And going back to that question of AI, artificial intelligence, we saw earlier this year the potential capabilities of methods developed by Anthropic that could cause the global financial market to crash within seconds. Now, are banks safe today from AI threats?
First of all, this is, I would say, an exponential discussion. All technological innovation is exponential forever. The problem is, and the challenge, I think, for all of us, is that right now, the speed, the velocity of this exponential change, it's not even in the years, it's in the months or in the weeks. And yes, the topic of the day is the Mythos LLM of Anthropic. But I think that in a couple of months, or even who knows when, you might have another company doing this step change in the capacities of the LLM in the United States, and then another one in China, and another one in another place in the world. So we're looking at the tree here when we're thinking about obtaining access to the specific LLM, the specific language model. I think that the broader debate should be about how to optimally regulate artificial intelligence. And in order to be able to do that, as I said before, no country in the world is big enough to do this alone. You require global, multilateral orchestration. We need to deploy new institutions, perhaps, where we'll be able to see how those technologies deploy, because frankly, they have a very big upside. They have a moon race element in terms of the productivity gain that we can have, but they also have a nuclear arms race element. They can have adverse effects. So you mentioned the financial system and the stability of the financial system and the worries that so strong systems entail for the cybersecurity status of all the institutions. Yes, that worry is there, but our capabilities will also increase the more we study this and the more we obtain access to this at the same time. The question is, can we capacity build fast, and can we have the proper institutional design which will enable us to be secure on the downside, but also gain the positive productivity aspects on the upside?
Do you regret, Kyriakos Pierrakakis, that you talk about the regulation aspect, yes, the framework, but on the upscaling part, that there isn't a European champion? There's a French one when it comes to large language models, Mistral, but it's not a European champion as such. Do you regret that there isn't a sort of a pan-European effort to scale up?
If I may say, as Eurogroup President, I consider Mistral to be a European champion and not solely a French champion. And I think that we need to develop this line of thinking, this mentality, overall throughout Europe, be that in banks, be that in telecoms, be that in any industry. We need to leave behind us the notion of having national champions in 27 fragmented markets. We need European champions which will be able to scale and compete globally. I think that your question effectively defines the challenge that we as finance ministers are facing right now and our leaders are facing. Unless we're able to do that, take banks. If you compare European banks to American banks or Chinese banks, are they making the requisite technological investments to be able to participate in this emerging global competition? Well, frankly, they're not doing investments in technology at the scale and the speed that they should be making if you compare them to American and Chinese banks. In terms of their size and scale, they primarily resemble banks in the UK or banks in Japan. This was a discussion which we already had at the Eurogroup, and a discussion which we plan to continue having together with the European Commission, because we understand that we need more banking consolidation in Europe. Yes, more cross-border mergers and acquisitions in the banking sphere, as your previous question on banks suggested. Everything is technological to a certain extent. The discussion is not only about AI. AI is a core element, of course. AI is crucial. AI is a critical infrastructure to a very large extent. But it's a discussion about technological sovereignty. What do you decide to do? When do you do it? And how do you do it? And frankly, we need to make choices, industrial choices. There are areas where we have phenomenal global champions. take ASML in the Netherlands, take Mistral in France, or our infrastructural players like Ericsson or Nokia in 5G infrastructure. There are many such companies in Europe. Can we capacity build them further as global champions, as not only European but global champions? And can we create the requisite ecosystems around them? That's the challenge. That's the key performance indicator for all of us.
One quick final question on this. Right now, the tech sector on the U.S. stock exchange is what, 38%, nearly 40% of the total value on Wall Street. Is that a problem for Europe?
What I'm going to tell you is that for us, the focus shouldn't be specifically on stock market valuations per se. What we should be looking at is, do we have enough technological champions to participate in this game? The question is, if I may use a specific terminology, are we asymmetrically interdependent? Because you cannot be fully autonomous. You can choose to be autonomous in certain areas which are national security critical. In all the rest, are we asymmetric? So the question is, can we make choices which will enable us to grow our technological champions in many technological fields so that we don't end up being asymmetrically interdependent with the US and with China? And I think that we can. That's the natural implication, the natural consequence of both the Draghi and the Leto reports. This is what Europe can achieve, and this is what this generation of policymakers wants to achieve in Europe.
So we can expect to see a kind of Wall Street of Europe?
Well, I would say let's first expect to see the Silicon Valley of Europe, and then all the rest will follow.
Well, Minister Kyriakakis, thank you so much for joining us once again.
Thank you.